Hello, everybody. Welcome. Warren Buffett announced at the 2025 annual meeting just recently that he will be stepping down as the CEO of Berkshire Hathaway and passing the reins to Greg Abel. And I wanted to talk about Warren Buffett. So I've talked Velko into discussing Warren Buffett, and we're going to have a whole episode about it. But I wanted to also do kind of a short preview what we're going to talk about in a much more concise manner than what you're going to hear later. So, we will ask an interesting question, as always, in the podcast. But for this intro, she's going to mostly talk about Warren Buffett's investments, couple of things about Berkshire Hathaway, and just state the main points. I think the podcast is going to be a lot more interactive. We are discussing a variety of opinions there related to Warren Buffett, so I think you'll find it fun. But for now, I just wanted to give you some information in general on Berkshire Hathaway and Warren Buffett. So, first of all, for those of you who don't know, and I'm assuming most people are familiar with Warren Buffett is a famous American investor, really kind of a manager of a conglomerate known as Berkshire Hathaway. We'll talk about Berkshire Hathaway as one of his misses because initially he purchased it as a textile company. It wasn't a conglomerate that we think of Berkshire Hathaway today. And his philosophy has always been that of a value investor, meaning that he looks for simple businesses that bring in cash flows with good managers. And he really reads through their financial statements to understand the business. Currently, the whole composition of Berkshire Hathaway in terms of their holdings, and they basically hold a variety of firms, privately held firms, under the umbrella, and also they have a sizable holding in publicly traded equity and also cash. So currently meaning as of May 2025, or let's talk more generally about Q1 of 2025, Berkshire Hathaway's market capitalization is about $1.1 trillion. Out of that, currently, they're holding close to 30% in cash, so close to $333 billion. They're also holding, I'm going to say anywhere between 20 to 30% in publicly traded equities, so close to anywhere from 270 to $290 billion. That amount fluctuates also. And the rest is how the market is valuing the private holdings of Berkshire Hathaway, the remainder, so to say, of the $1.1 trillion. So I'd say, somewhat over $500 billion. So that's the main composition. This investment in Berkshire, which started in 1965, if somebody invested money in 1965 or even 1980 or even more recently now in Berkshire, they've been able to receive a very handsome payout. And Warren Buffett has been known to beat the S&P 500 pretty continuously with the exception of 11 years. And the majority of those 11 years where he didn't beat the S&P 500, I concentrated during the tech bubble of 1995 to 1999. So just to build in a little structure into our preview, what are we going to talk about? What am I going to tell you? I'm going to talk a little bit about the four biggest holdings for Berkshire Hathaway, what Warren Buffett calls his pillars, the four pillars. We're going to talk about the actual current holdings of publicly traded equity in Berkshire Hathaways and some of those choices that have been made. We will take a look at the returns of Berkshire Hathaway over time, so their stock price, and we will talk about just anecdotal evidence about some hits and misses for Warren Buffett. He's very public in acknowledging anytime that his investment doesn't go, maybe not anytime, but he's pretty public in acknowledging the problems that he's had and perhaps the unwise choices that he's made in his investments, or that he wishes he would have made a different choice. So that's a preview. And the main question is again going to be in the podcast. For now, this is just a bit of a preview. So let's get started.
Welcome to Questions in Finance,
A podcast where we translate academic mumbo jumbo to answer interesting questions in finance. I'm Kate Holland.
And I'm Veljko Fotak. Kate and I met when we were PhD students at the University of Oklahoma.
Today, we're university professors, and we spend our days teaching and researching companies, markets, and all things related. We are talking about Warren Buffett. I'm going to show you a few interesting things. So I'm going to share my screen with you. And I would like to take you to two Wikipedia pages. One lists all of the assets of Berkshire Hathaway, and I think is just very helpful. It allows you to see that 30% of cash holdings, and Berkshire Hathaway owns 100% ownerships, multiple private firms. So as we look through this list, you will see things that you're quite familiar with, and a huge variety of companies, a jeweler, a paint company. You will see a lot of insurance assets because insurance is kind of the core of Berkshire Hathaway. So several insurance setups. Berkshire Hathaway Energy. This is one of those four pillars. This started out as Mid-American Energy, and it's one of the important investments that was done by Warren Buffett. I'm just going to kind of scroll through this. These are private firms: Dairy Queen, Business Wire, some of the Brooks Sports. Also important, another pillar is right here, BNSF Railway Company. That is the railway. Look, Dairy Queen, Duracell, all of these, Geico Insurance. Here's the pillar number 3. So far we've covered 3 pillars here out of the 4. The first one was Geico. Well, actually, the last one was Geico. Then we had the BNSF Railway and Mid-American Energy, which then became Berkshire Hathaway Energy. Those are his 3 most important investments. And we're going to come up to the 4th one shortly, because that one is going to be actually in a publicly traded stock. All of the other ones, all of these firms here that are listed are private. So let's see what other private companies. He's got Helzberg Diamonds, a jewelry maker, jewelry seller, I guess. A lot of other companies here. NetJets, another one that's easy to recognize. This is a more recent acquisition. I think in 2018 they bought the set of gas stations, Pilot, Flying J, and some furniture companies. See's Candies, of course, that's another typical one. Fruit of the Loom was up higher. We didn't catch it, probably shortly after Dairy Queen. So these are private holdings, and then there's publicly traded holdings. So this represents close to $280 something billion. So anywhere, I'd say it's close to 26% of his total ownership of Berkshire right now. But I'm gonna put the fluctuating amount between 20 to 30% is held in public equity. That percentage used to be larger back in the 1970s, close to 50%. But now more of the money sits in private firms, and also 30% is sitting in cash as of right now. So these are close to 40 publicly traded firms. I'm just going to scroll through them because I will actually show them to you in the chart here in a moment that you can see easier. And he's recently been concentrating some positions in Japanese car makers, so they're listed right here as well. We're coming back to this, but before we leave Wikipedia, another excellent page is just the Berkshire Hathaway page that describes, the progression of the company. But I'll mention a few things about it today as well. So before we get to the stock holdings, I would like to jump into Yahoo Finance and look at this stock chart right here. So let me kind of minimize this. I have it mapped all the way back to the 1980s, and the blue line is the Berkshire Hathaway stock. So if you invested, $1 in the stock back in the day, I think this again goes back to close to as long as we have, which it says all here, but you can see that trails off probably somewhere in the 80s, but the company started in 1965. You can see that you would have come up with, at least what this chart shows, $55,248 while that same dollar invested in the S&P 500 would have translated into about $3,000. So much stronger, better returns than the S&P 500. Now, let's, I guess, take a look at perhaps the last 5 years. Still significant outperformance. Blue line is Berkshire. So if you spent your money and purchased Berkshire stock back in right after COVID, you still would have outperformed the S&P 500. Dollar invested would have increased much more than your investment in the S&P 500. So just some interesting charts to look at. And finally, it's always important to take a look at the financial statements, income statement, balance sheet. And also here you can figure out the market capitalization, what I was talking about, that $1.1 trillion, which is the market value of equity for this company. Okay, let me talk to you about the four pillars. We've already mentioned Geico Insurance, BNSF Railroad, Mid American Energy, and the fourth one is Apple, the only publicly traded one. So the current investments that Warren Buffett has in Apple, after actually divesting in 2024 and 2025 a significant amount of his position, is $75 billion. And he's had a handsome payout from Apple. So I guess he identifies these as some of his greatest investments. Insurance really was at the core of the business for Berkshire Hathaway. Insurance companies obviously generate a lot of money that need to be invested because people who buy insurance make premium payments, expecting that in the event of an emergency, the insurance company is going to cover them. So those insurance payments need to be invested for them to grow in order to cover all of the unexpected outcomes that could come up. So another interesting fact, and what we've talked about already, is just the information about Berkshire Hathaway currently in general. We've already mentioned the $1.1 trillion market capitalization, 30% of that sitting in cash. This is more than normal for Berkshire Hathaway. As a matter of fact, they were hovering at about $100 billion level from 2019. They started gradually increasing their cash position starting at the end of 2023, beginning of 2024. So this ramp up from close, somewhat over 100 billion to over 330 billion occurred over 2024 and 2025. Then he also holds, close to 300 billion, somewhat less, in publicly traded companies. So and is this used to be bigger? So his publicly traded firm holdings were larger back in the 1970s. What is he holding his money in when we're talking about the publicly traded firms? And remember, this is, anywhere from 20 to 30% of Berkshire Hathaway, or about $280 something billion. Percent, even 61% is tied up in four holdings. Number one is the pillar, Apple, the largest position with $75 billion. And number two, American Express was $45 billion. Number three, Bank of America, close to $30 billion. And finally, Coca-Cola was $45 billion. Coca-Cola is his investment for over 40 years. So he has held a position in the company for a very long time. He himself has been an avid Coke drinker, so a big consumer of the product. And in 2024 alone, he received $770 million in dividends from Coca-Cola just last year alone. So 60% of his public holdings, public equity holdings, in those four firms. The rest you can see somewhat spread around. So if I was going to kind of summarize his positions, he has money in financial firms. We see here Bank of America, we see American Express, we see Visa, we see MasterCard, we see Chubb. So all of those are firms in the financial sphere. He has holdings in energy company, Occidental and Chevron. He's been known to have a very excellent mentor mentee type relationship with Occidental CEO Vicky Holub. He also has holdings in tech firms. So this is a bit interesting because for a while, Warren Buffett said that he's not going to invest in tech because he didn't understand that this was, in the late 90s. But ultimately, he came to hold his biggest publicly traded position in public equity in Apple. He also holds a sizable stake in Amazon. So this is a bit about his holdings in publicly traded firms. Again, let me remind you, the four pillars across private and public firms are Geico Insurance, BNSF Railroad, Mid American Energy, which became Berkshire Hathaway Energy, and the only in the four pillars public stock, Apple. His returns, as we've seen, and we've seen something that resembles this chart actually on real-time Yahoo Finance, have outperformed the S&P 500. I think one of the important things is that he's had a lot of time, and that's allowed his investments to compound. And of course, he has been very selective in finding businesses that provide cash flows, consistent cash flows over time. We can see that it's not true that Buffett has always beat the market. He's had some periods of underperformance, most notably the 95 to 99 period. This is when the tech bubble was occurring, and he was very careful about investing in tech because, again, he's a value investor, not a growth investor. I would like to, so now just to summarize, we've looked at the four pillars, we looked at his public holdings. I would like to talk about some of these hits and misses for Warren Buffett. So for the hits, I'm going to discuss Coca-Cola, BYD, and Mid American, the energy group. And for the misses, Salmon Brothers, US Air, and Berkshire Hathaway. So a little bit of a background on some of them. Coca-Cola, he's held the position in Coca-Cola for a very long time, and he has received a large dividend from it, and he's a big fan of the beverages. BYD is another interesting one. It was brought up to him by his co-advisor, Charlie Munger. He has unfortunately already passed away. In 2008, Berkshire Hathaway invested $130 million for a 10% stake. In 2 years, that 230 million grew to $2 billion. So that was kind of a big success. And finally, he invested in Mid American back in 1999 and purchased initially a 75% stake in this firm and then grew it through acquisitions. It's a utility company in Des Moines, Iowa. And I have an interesting story here about Mid American and the Buffett being involved in the energy industry, because I'd like to tell you a bit about how this 1999 investment in Mid American increased Buffett's interest in the energy industry and how it led him to make a loan to Williams companies when they were in trouble in 2002. I would like to mention this loan, but before we talk about the loan, remember the three misses we'll discuss. We will talk about Salmon Brothers, US Air, and finally, Berkshire Hathaway itself. All right. Let me tell you the Williams story. I actually used to work at the Williams Company. I used to be a power trader there. And as we all remember, in the early 2000s, there was this huge fraudulent case of Enron. Enron made some off-balance sheet reporting, so they had off-balance sheet liabilities. And when the market found out, it was a huge, basically, a negative event for Enron, and Enron went bankrupt. Well, I was working at Williams. Williams was just another energy company, but Enron created almost like a wave to where all energy companies were under stress, including Williams, because many positions across energy companies were with Enron. So they came back on energy companies' books, and it was just a tumultuous time. On top of it all, Williams just got a bit, I would say, unlucky with a big debt payment coming due that was partially related to the fiber optics operations that they've split into a separate company. We won't go too much into that story. But Williams really is and was a very simple company. It's a pipeline company. They move natural gas from one place to another and collect a fee for it. So it's a very simple business. They also had a trading flow operation tied into it, which is where I was involved, and this fiber optics subsidiary that they've spun out. So there's a big payment that's coming due, close to $1 billion. And Williams didn't have the money to make the debt payment. So this is, again, early 2000s, Enron just failed. The whole energy industry is in kind of dire straits. It's a difficult situation for the industry. Williams is a strong company with a solid business, but they just don't have the money to make the payment on this upcoming debt. And they asked the banks whether they can roll the debt over. They were told no. They were asked if they can restructure it. The banks were not willing to play ball because they knew that Williams is in trouble, and perhaps they had an idea of pushing Williams into bankruptcy and then getting the claim on Williams' assets to just get their payments back. In any case, what I'm trying to say is that nobody was willing to lend money to Williams. For me, it was a bit of a hit because Enron just went bankrupt. So there were a lot of traders already looking for jobs from Enron. So I was very worried because I felt like if I would lose my job with Williams, if Williams wasn't able to pay on their debt and will be going bankrupt as well, then I'll just be another trader joining the job search on top of all the Enron traders. There was a lot of uncertainty, very uncomfortable situation. And then in the last moment, when the stock price of Williams was below $1 already, so everybody was pricing in their demise, Warren Buffett agreed to make a loan to Williams, and this was done in the last moment, and this saved Williams. However, Warren Buffett also walked out with an amazing deal. He gave a loan to Williams of $900 million, close to $1 billion, but he collateralized this loan with just an amazing pipeline that ran from Texas to New York that was worth $2.7 billion, so 3 times the amount of the loan that he gave to Williams. And long story short, Williams ended up taking the loan, not going bankrupt, doing better over the year, repaying the loan to Buffett. And what came out of that is that over just 1 year, on a loan that was collateralized 3 times over with an amazing pipeline, Williams ended up paying 35% interest on $900 million loan. They ended up giving Buffett close to $300 million in fees and interest and other payments. So that was also an excellent way to make money in just 1 year, a huge return on this investment. Of course, for Williams, it was an amazing deal too, because remember, nobody was willing to step in and help Williams. That's a story of Warren Buffett coming in and providing Williams a loan, and an interesting story from both sides there. So enough with hits. We've discussed Coca-Cola. We've discussed BYD. We've discussed his investment in Mid-American Energy, which got him interested in energy in the first place in 1999, which then allowed him to give the loan to Williams, where I worked back in 2002. Let's talk about some of the misses. First, we'll talk about the bank, then about the airline, and then we're going to go on to actually Berkshire Hathaway. Miss number 1 is going to be Salomon. Salomon was a bank. Warren Buffett purchased a stake in the bank in 1987, but in 1991, Salomon was subject to a huge scandal, and the traders in Salomon were accused of rigging the Treasury note auction. And Salomon didn't quite face up to this right away. It was a huge mess. Buffett himself had to step in, clear things up, become a chairman. But this problem here is that Salomon never recovered. And in 1997, they sold themselves to Travelers Group, which eventually, became Citigroup. And what Buffett said he learned from this investment, I'm just going to read this quote here, is that he said, "I can handle bad news, but I don't like to deal with it after it has festered for a while." So he was upset that there was a reluctance to face up immediately to bad news. And that's what turned the problems at Salomon from ones that could have been easily disposed of into ones that almost caused the demise of the firm with 8,000 employees. So, number one miss is scandal. That one was tough to predict. Number two miss is an airline called US Air. Richard Branson, who is a US investor too and also an airline owner, was once asked, how does one become a millionaire? And he said, well, that's quite easy. You need to be a billionaire and then you buy an airline, suggesting that you would lose a lot of money when you purchase airlines. Buffett decided to test that, so he invested 1989 $358 million to get about 9.25% ownership in US Air. However, he underestimated his understanding of the deregulation of the airline industries that was happening in the early 90s. And in the early 90s, basically, US Air from 1990 to 1994, 4 years right after Buffett invested, declared losses totaling $2.4 billion. US Air later merged with US Airways, and eventually American Airlines bought this merged entity. That was another miss for Buffett. The reason there was trying to figure out how deregulation will influence an industry, especially an airline industry with such tight profit margins, is really difficult. And finally, the last miss we'll discuss today is Berkshire Hathaway itself. Berkshire Hathaway, to us, is known really as a holding company that Warren Buffett runs, and under whose umbrella he holds a variety of private firms and significant ownership in some publicly traded firms, with kind of four key ones. We said Apple, American Express, Bank of America, and Coca-Cola, 60%. And Berkshire Hathaway initially was a textile manufacturer in New England. And Warren Buffett initially purchased stock in Berkshire Hathaway back in 1962 from the brother of the CEO. The CEO was this guy named Seabury Stanton. And Seabury did not get along with his brother, who owned a lot of shares in the company as well. It was publicly traded firms with somewhat of a family-run operation, where Seabury's son was also a treasurer in the company. So Warren Buffett purchased shares from Seabury's brother and became a major shareholder in this textile industry in the early 60s, when the textile industry in New England, in the US, was starting to die due to additional foreign competition, even back in the 60s. Actually, a few years later, in 1964, Seabury Stanton talked to Warren Buffett and said that he would like to buy out his shares. The initial purchase of shares by Warren Buffett in 1962 was done at $7.50 a share. What Seabury mentioned to Warren was that he's going to offer Warren $11.50 a share. But this was a verbal commitment. When the official contract came, a written contract came in, the offer for shares was $11.37.5, just slightly less than $11.50. But Buffett got very angry at this, and he did not tender his shares. He did not sell his stake in a company that was really in the industries that was going downhill, because he was so upset with Seabury. And he decided to up his stake and buy more shares at a higher price in order to fire Seabury. So he bought more shares. And then in 1965, a year later, after this tender offer by Seabury, Seabury and his son left Berkshire Hathaway. And Warren Buffett was left with a company that was in a declining industry. So in his own words, this is how he describes this investment. Through Seabury's, this is the former CEO of Berkshire Hathaway, and my childish behavior, after all, what was an eighth of a point to either one of us? He's saying, this was like such small amount of money on either side that they just got into this emotional battle there. Seabury lost his job, and I found myself with more than 25% of capital invested in a terrible business about which I knew very little. A lot of the textile mills ended up closing, and of course, Warren Buffett used Berkshire Hathaway as the main shell under which he held the rest of the businesses that he purchased. But he basically says that the initial investment in Berkshire Hathaway, the textile company, is one of his misses. This summarizes a bit of information about Berkshire Hathaway. And in our podcast episode, together with Velko, we will discuss more of it in a more dynamic discussion. I just wanted to give you a few highlights. I wanted you to be familiar with Warren Buffett and Berkshire Hathaway. Warren Buffett passing on the reins to Greg Abel. I wanted you to understand what is the composition of the portfolio for Berkshire Hathaway in terms of cash, private firms, and which private firms there are, and also publicly traded firms. We talked about the four pillars, the four main investments that have made Berkshire what it is and provided it with such an outstanding return over time that has beat the S&P 500 return handsomely. Those four pillars were: number one, Geico, the insurance company; number two, the Mid-American Energy that became Berkshire Hathaway Energy, and that was my Williams story there; number three, BNSF Santa Fe Railways; and number four, Apple. So that's what he considers as like his main investments. We have also talked about publicly traded firms that Berkshire Hathaway holds. We said that 60% of those holdings are tied up in four stocks, with Apple being the largest position at $75 billion. And then you have also American Express, Bank of America, and Coca-Cola. Finally, we discussed some hits and misses for Warren Buffett, with hits being Coca-Cola and BYD, and also this energy firm that he's invested in. These are just some of them. Of course, there's other good stories like Apple, for example. And for the misses, we talked about Salomon, the bank with a scandal, US Air, an airline during the time of deregulation in the airline industry, and Berkshire Hathaway itself, which at the time was a textile mill company. Warren Buffett has inspired, I think, many young investors and old investors and middle-aged investors alike to follow in his footsteps of value investing and understanding of financial statements. He has been an amazing personality, I think, in the field of finance. He's held annual meetings. In the 60 years that he has been running Berkshire Hathaway, 60 years, he started in 1965, we're in 2025, and he's passing on the reins. Of course, he is staying on as chairman, so I still think he'll be very actively involved for as long as he can. And he has done an annual meeting every year, which is a huge event now, where he answers questions, talks about the company. Many people, those who own stock in Berkshire or don't, have listened in to his shareholder meetings to understand his standing on the economy, to understand his views. And this is largely because while himself, Warren is a very sophisticated investor who pays detailed attention to a variety of financial statements, he can convey the information in a very simple manner, in an approachable manner to many people. He can translate the mumbo jumbo and make it accessible to all investors. Thank you, Warren Buffett, for giving us a reason to talk about investing, for also probably giving many people an amazing retirement, those who's invested in you. And I hope you guys found this interesting. There's going to be a podcast following this brief introduction where we'll discuss the same things, but instead of a monologue, where both Velko and I will be discussing things. Thank you.